Let's talk to Craig Erlam. He's the senior market analyst at OANDA. Very good morning to you, young Craig.
Good morning.
And on a personal note, good luck this evening.
Thank you.
Right, let's talk something interesting in terms of the markets. The Great British Pound, certainly not so great at the moment against the US dollar. Just to recap, we had some fundamental analysts come on the show last year and suggest that this was going up, and the technical guys said it was going down. We've broken up. Nomura, beginning of the year, went on and said it was going up to 148, 150. All the institutions said it was going up to 148.50. And because the crowd was one way, guess what happened over the last week or so? Is this a Brexit currency, pure and simple? Is this all about Mr. Carney? Is this just the most difficult pair to trade in the world?
I think it could be one of the most interesting pairs. There's so much going on. Yes, Brexit is having a big impact. The reason why these forecasts for 150 is just because people are anticipating smooth Brexit transition. Obviously, there's going to be a lot of noise in the background, but does anyone expect no deal? I think fewer and fewer people are expecting that, so you've got to factor that in, and that would be bullish for the pound in the same way that the initial referendum was negative. So you can completely understand the fundamental basis for your longer-term projections, and let's be honest, this graph, this chart looks a bit grim. Yep. But it looks grim in the near to medium term. In the longer term, there's no reason why we can't be hitting these 150s. And I think you've always got to be careful when you're forecasting these levels to give a time frame on it, because near term, medium and long term can be three entirely different forecasts. And so there's different factors weighing into it. With regards to this one right now, I think the Bank of England situation is having a heavy impact. The US is having an impact as well. The dollar is strengthening right, left and centre across the board. The euro is suffering, the Canadian dollar is suffering, the Australian dollar is suffering, the yen is suffering. The US dollar is finally seeing some strength, and it's been 18 pretty terrible months for the greenback.
Yep.
So all of this is being reflected in here, and it's a really interesting week for this pair because from a technical standpoint, we've had a really tasty breakout. We've had a double top formation. You can see the two peaks around the 143.50. Yep. Very bearish when you see the breakout, and we have seen that breakout now. It's a sizable double top, which suggests that the scope for downside moves seems large. Worth pointing out with all technicals, nothing is written in stone. This is not perfect every time. The textbooks are just giving
science.
It's not an exact science, and anything can change in the interim. These give possible price projections. Yep. That's what people like about double tops, head and shoulder patterns, etc. And what you've got is you've got a nice double top
targets to add, aren't they?
Yes, typically they are minimum targets, but again, they're not perfect. And I think people can sometimes get really stuck on this idea that this has happened, therefore this has to happen. It doesn't have to happen. Anything can change in the interim, but it gives you possible price projection targets, which have seen to be reliable. So what we've got here, we've got a real big double top with the neckline just above 137, the head, the tip around 143.50. That gives you a nice big potential projection lower. So I've added that in the orange line. If you took the size of that double top and projected it below the neckline, now that we've had a break and the close below, that takes you back to around 130.50. That's a big old move to the down. 130.50. Yes. So, and 130 is typically quite a nice psychological level anyway. So it's always nice when these things tie into each other. What I haven't got on this chart is from the low, the Brexit low, to the peak. That 130 to 130.50 level is also roughly a 50% retracement of that. So again, these technicals start to tie in quite nicely. When we're looking at the fundamentals to see if they can at least back up what we're saying technically, I wouldn't always recommend to tie fundamentals purely to technicals. But it is nice when they do tie in some way. So we're looking at the situation right now. Brexit, I think, is largely priced in, barring any disruption or any real strong development, which I don't anticipate in the near term. The data from the UK has been poor. The GDP figures, we had the PMI yesterday, which was the manufacturing PMI. It doesn't look good for the construction or the services PMI this week. Rate hike expectations from May have been dragged seriously back from around 70% to below 40%. Mark Carney, the Bank of England governor, said only about a week and a half ago, he started moving away from the idea that May meeting is important, saying we have to remember there are other meetings this year. Clearly this idea that where there was confidence before that May was a good time to raise interest rates, the inflation data was weaker than expected as well, we can afford to hold. And it's something I've said for so long. What is the rush with this rate hike? Brexit talks are still going on for the next 6 months or so. Why can't we wait 3 to 6 months till we have more clarity? So I think everything's tying in very nicely, and the pressure's off the Bank of England to raise interest rates. The Federal Reserve, could raise an interest rate a fourth time this year. So it looks like June is likely, September's likely, leaving the possibility for a fourth in December.
Yep.
So the more hawkishness from the Federal Reserve. Inflation crept up to 2% yesterday, the Fed's preferred measure. We've got jobs data on Friday, the Fed decision this evening. So much going on this week for this pair. And so far, for the last couple of weeks, it's been very, very negative, and the technicals are very much supporting that right now. So I think for the next week or two, this is going to be very interesting.
Sounds like the charts are telling us to be a seller for choice. Craig, as always, thank you very much indeed.
Thank you.